All right, let's look at the AUDUSD. Let's do our analysis before the market open on the 10th of July 2026. Okay, do well to subscribe to this channel so that you don't miss out on any of our daily analysis. Uh, let's see what the market is doing. Let's see what the market is doing. Okay, before we go into the pair, just know that this video is for educational purpose only. Okay, always do your own analysis. Okay, now let's go back to the pair. Oh, yesterday, this was our analysis yesterday against the market today. And we had our trading plan that we look for buying opportunity around this level. And if the market break to this zone, we look for selling opportunity around this level. Or if the market break to the upside, we look for buying opportunity around this level. Now, this was our buying candle based on our plan, our trading setup. This was our buying candle. This was the trigger. I believe so many of us actually took this trade. Okay, and if you have taken this trade, um, let me just show you where your now your stop loss would have been somewhere around this level. If you have taken this level, this trade, I'm just trying to explain something to us so that you can learn it. This is the entry. Then our target will be this level. You know, I told us to always trade zone to zone. So if you have entered this trade at this level, please hold your position. Okay, hold up. This is 1:4. You know, I told us that when you take a trade, you know, people believe that you enter a trade, once the market move, you break even. That is good. But if you're a swing trader, sometimes just allow the market to run. Okay, just make sure that you risk what you know you can lose, so that once the market move, leave the leave your stop loss where it is. Let the market stop you out if you want to. That is why you should always do a good analysis and stick with the trend if possible, because the market will always retrace, reverse, and do what it likes, but make sure that you risk only what you are willing to lose. So now, if you enter this position at this level, just hold your position. The market may do some funny movement around there. It doesn't matter. And definitely, this is where the market is coming. Okay. If the market did not come to that level, this level, then the market will stop you at. And if you stop you at and break to this level, look for an entry around this level and do the same thing, hold your position. And one thing I can assure you is this: if the market, if any of the time you enter the trade, the market actually go to the zone, get to the zone, I tell you the truth, it will cover more than five of your losing trade, more than five of your losing trade. Okay, so that is how you should trade. Like you can see what happened. Markets broke. Let's assume that you entered from this place. You see the movement of the market. Now, if you have broken even, if you have broken even to this level, the market will stop you at and will still move to the downside where you predicted it to go to. That is why I really advise people just risk only what only what you can lose and allow the market to run. Now, if you have put your stop loss around this level, which was the best place for your stop loss, the market would is not it didn't even get close to you. Okay. I know we have the strategy of you double down, you enter more position. Yes, it's good. That is why once you enter a trade, look for another pair and do a good analysis and enter a trade in that pair and allow your market to run. The only time you will be afraid is if you are risking too much. But that is why always risk what you can lose. Always risk what you can. What you know that if you lose this money, nothing, you won't feel it. Your psychology will not be affected. Well, that's that. That's that. Let's go back to the analysis. So now this was our plan. Okay. Now, if you have taken this, if you had take this trade, if you took this trade, you hold your position, just hold it and see what the market will do. But for those of us who have not entered this trade, of course, you can see the market broke out, broke out from this structure, and but this is not a good retracement. You know, I always advise for a full price action retracement. So I don't really, this is not a full price action retracement. So and you can see there's no bullish momentum. So I won't advise anybody to take this trade from this level, even though there's a possibility that you can take the trade from this level, but you can easily be stopped at because of what I'm seeing in the market. So what I will advise to do is, for those of us who have not actually entered this trade, this is where I will advise you to come and wait for the trade. Okay. Now wait for the market at this level. Yes. This is another level where you can actually take a trade at this level. Just wait for the market around this level. If the market do some level of retracement, then you can look for an opportunity at that level. Okay. So I'm expecting the market to do some level of retracement back to this level. Then we can look for buying opportunity. Okay, that is one. And two, the market can decide to break to the downside. There's a possibility that the market will reverse. So you look for selling opportunity only around this level. I won't advise anybody to sell this market at this level. Okay, I will not. Unless you're a scalper, you can scalp it. So, but look for buying opportunity when the market break through the structure. I'm actually expecting this. I'm expecting some level of retracement, maybe something like this. Then maybe break from this structure, retracement. Yeah, this is what I'm expecting the market to do. Okay. Now, so my I'm looking for buying opportunity around this level. You get it? And selling opportunity around this level. So these are set up uh for this pair. Let's watch out for what the markets will do. Okay. So let's see. This is tomorrow is Friday, and let's see. Okay, see you in the next pair.